Welcome to Cincinnati Preschool Promises webinar titled Small Business Tips, Taxes and Accounting. My name is Hector Polanco and I will be your host for this webinar. There are a few basic points I need to explain before we get started. As you can surmise, we at CPP are not experts in the topic of today's webinar and are therefore not able to provide you with legal, financial, tax, or business advice. Please rely on trusted advisors you select for that type of advice. Our presenter today is not an employee of CPP, and any information or opinions provided by her are her own and not those of CPP. We have disabled your video and audio and will not be taking questions live during the webinar. Still, you can use the Q&A feature on your screen to submit questions. We will collect those questions after the webinar and look to post them as FAQs within 2 business days of the webinar's close. If during the webinar any questions come up, please feel free also to use the info@cincy-promise.org email that you will see splashed across the bottom of various pages. The page you're seeing now contains the legal disclaimer you agreed to when you signed up for this webinar. I will not review it at this point, but you're beyond just saying that it explains the legal terms, what we have already told you. Basically, we are not experts and you should seek advice from experts of your own choosing. At this point, I want to flip it over to Chara Fisher-Jackson, the Executive Director and CEO for Cincinnati Preschool Promise, for a few short words. Chara?
Good afternoon, everyone, and thank you so much for joining us. This is the second in a series of webinars that the Cincinnati Preschool Promise is hosting to continue to support our community providers as we move through these challenging times. Our goal is to bring together industry experts with providers to get the information that you've requested and needed. We are so pleased today to be joined by LaShawnda Wright, who is the principal of Wright Finance Group. She comes highly recommended to us through the African American Chamber of Commerce and has decades of experience in accounting and finance, is an authorized IRS provider, as well as an accounting instructor. She will have great information and details for you today. And again, she does have significant experience in tax preparation, accounting, and finance with child care providers, just like the ones that are part of the Cincinnati Preschool Promise. With that, I would like to turn it over to Ms. Wright.
Thank you. It's nice meeting everyone today. I do want to just I want to give a quick update just in regards to 2 things. One, what's happening currently with the unemployment for business owners. And then 2, what happens and how do you go about obtaining the $1,200 that's part of the stimulus plan that was presented to us maybe about 2 or 3 weeks ago. So we'll start off first with just taxes in general and what you guys will need in order to prepare your either 2018 or 2019 taxes. So I think the first thing I want to talk about is just how you are set up currently, because that does matter with how you're going to process your tax return. So there's a few different types of business setups, but the ones that you are probably under is going to be the sole proprietor and the LLC. So let's talk a little bit about the sole proprietor. If I were to guess, I would say that maybe 70% of child care facilities are actually sole proprietors. And that doesn't include the daycare centers. So I'm more so looking at the type A and type B locations. So as a sole proprietor, you don't need to do anything to set it up. Once you actually start the business and you start getting any kind of funding from an organization, typically a 1099, typically the payment will come in the form of a 1099 at the end of the year, as opposed to a W-2, which you would get from your employer. Once you start to receive those, then you are automatically characterized or categorized as a sole proprietor. So it is the simplest method. It is the least expensive. You don't need any documentation. You don't have to report that information to the IRS that you started the business, and you don't have to give that information to whatever state you're bound by. It is only for single individuals who own the organization. Like I said, there's no registration needed with the IRS. And when you process the tax return for a sole proprietor, it goes with the 1040 that you're already creating. So it goes on the same forms as your regular tax return, except the form is called a Schedule C or a Schedule E if you own property. So again, if you've been filing a 1040 all this time, then hopefully your business information has been generated based on what's on the Schedule C that you have. I have had a few people come to me to say that, hey, I haven't found my business return, but I did do my personal return because maybe they only did daycare for half of the year, or they didn't, they tried it out, didn't have enough children, and so they still had a W-2 job, or maybe the person has a part-time job. Just because you file a tax return does not necessarily mean you've included the correct dollars for your actual business. Those two returns are done together. All right, next slide, please. The second formation is a partnership. I would not expect that either of the original two daycares that I was speaking about earlier, the A or the B, not the actual centers. Centers may be formed as a partnership, but for the most part, you can't have a partnership for the type A or the type B daycares. So with this slide, we're specifically looking at individuals who may have just recently opened up a partnership with someone that they know and decided to go in business together. This setup tends to be a little bit more difficult when it comes to the tax preparation part of it. You probably will need some help from another individual in order to process your tax return. And if I go back for 1 second, you don't have to flip the slide, but if I go back for 1 second with the sole proprietors, that really is a tax return that if you study enough about it, you could easily create your own tax return. So when we get to the partnerships and some of the corporation type tax returns, I do feel like those are a little bit more difficult. So you want to make sure you get with someone who's knowledgeable so that they can make sure that you're not overpaying your tax liability. So any partnership, this is going to be 2 or more individuals. You must file with the state of Ohio to get started. There's a $99 fee that the state charges you. There's no documentation needed, but there's also no liability protection. And you also still have to get an EIN number from the IRS. Partnerships have a different due date than regular individuals, and there is a reason behind it. The partnership must file a completely separate tax return. They're typically called the 1065, and those are due by March 15th of that year. And the reason why those are due 1 month in advance of the regular tax returns, which are due, individual tax return, which are due usually April the 15th, is because this is where you'll actually see how much money you made in the business. So once the business return is filed, that goes on to a Schedule K, and that K1 flows to your personal tax return. Okay. Next slide. Most people, if they're not a sole proprietor, they still opt to get that protection, that legal protection, to become an LLC. Now that one, it's still kind of easy to file, but you do have to file with your state and with the federal government to notify them both that you're requesting to be a business and you're requesting for legal, for some legal rights that you don't get when you are set up as a sole proprietor. The biggest difference between the sole proprietor and the LLC is the protection that you have against your personal assets if someone were to sue you, your business, not you, but to sue your business. Again, it's 1 or more individuals. You must file with the state. There's a $99 fee. You do need to have articles of operation created, and that helps you to make sure that you know the relationship, the financial marriage that you're getting into with your partner before a situation arises. And then you don't know how to handle it. So the best thing to do is to have that prepared before you actually go into business with someone. LLCs has liability protection. The partnership must file the same 1065 as we talked about with the partnership return, because that is actually what the IRS recognizes, and that income flows to your personal tax return. S Corp. S Corp is it's not a newer formation, but it's one that people are using more and more. It is one that I would, as a tax preparer, I guess what I say to you, you should take back to your actual tax preparer and see if this is in your best interest. But there are a lot of benefits for LLCs to be taxed as an S Corp, or for individuals to start businesses as S Corps as well. Some of the benefits, well, one of the main benefits of establishing an S Corp is the ability that you have to pay yourself payroll. So this actually does work for seasoned daycare workers who have been in the business for maybe 2 or 3 years, and you know how to consistently keep your kids and your income level at a certain level. Once you know, and once you are confident that you can maintain a specific level of income for yourself, you can put yourself on payroll. One of the main benefits of that is whatever you are paying yourself on payroll, you are also paying into your self-employment. In addition to that, the amount that is over the amount that you say that you pay yourself on payroll won't be taxed for the self-employment portion. There's some other benefits and there's some cons as well to it. So like I said, make sure you speak with your tax preparer or your accountant before you look at the options to become an S Corp or to be taxed as an S Corp. But there are some payroll benefits, and that is especially for individuals who own centers. There is a fee to file. It's $99 with the state of Ohio. You are required to have articles of operation. You also have the liability protection, and you are required to file. It's actually not a 1065, it's a 1120. So that's an error in my slide. It does produce a K-1, and that does still flow to your personal tax return. Okay. Next slide. So once you have your documentation gathered, so everyone on the call should have received the 1099 from the establishment that pays you for the vouchers that you receive. That income is then added to your tax return. Your job is to let the IRS know what expenses you paid, so that they can find out how much they should actually tax you on. For example, if you are a daycare and you were able to have income of $100,000, theoretically, the IRS is going to give you your normal deductions that you would have already have gotten, which is just, head of household or single, or based on the number of kids that you have. And then they're going to tax you on whatever is left. So let's say the standard deduction was $10,000. They're going to tax you on $90,000. It is our job to go and tell the IRS, hey, these are expenses that I've created that are directly related to the amount of money that I made, so that the IRS can only tax you on the portion that is left. So if it was $100,000 made, $10,000 on standard deductions, but I have, $60,000 worth of expenses, theoretically the IRS will only hold me accountable to pay taxes on the $40,000 that's left. Hopefully those numbers added up, but hopefully that makes sense. So some of the bigger tax liabilities, and this is specifically for, maybe a type B person who has someone that they're paying on payroll. So it's not a 1099 employee or anything like that. This is someone that you have on payroll. This would apply to you as well as individuals who own centers. So in regards to the payroll taxes, you have federal liabilities, you have state liabilities, and then you have local liabilities. Some of those federal liabilities include those self-employment taxes, and then there's some additional small taxes, some FUTA, which is the federal unemployment program, and then you have your state taxes. So you have your unemployment taxes from your state, and then you have your local income taxes. So you have federal, state, and local income taxes. All of those items that you pay on behalf of your employers, on behalf of your employees, is a deduction that you get to take. Okay, so now we're going to go through all of the additional expenses that you can deduct. So when I said that if you are an individual, a sole proprietor, or a one-member LLC person, this stuff is easy for you to gather, and you really should be trying to manage the data on a month-to-month basis, because it's going to be much easier for you to obtain everything that you need, and then you won't miss the expenses because they'll be at the top of your mind. When we wait until the end of the year, sometimes we forget about money that we spent, especially if we spent it in cash. And so we may miss an expense. So if I have, if I went out and I bought new toys for my kids to play with, and I spent $500, and I forgot to add that $500, whatever tax bracket I'm in, let's say most people, are in the 20% tax bracket. Well, 20% of $500 is $100. So that means that I'm giving the IRS back $100 if I choose not to put that, or if I forget about that $500 expense. So the point to that is, please make sure that we have all of our expenses. And the best way to do that is to be looking at our numbers on a monthly basis. One of my biggest suggestions that I have for, small business owners is to have a separate bank account for your business than the one that you use for your personal life. And this does two things. One, it protects your LLC, and, that's something that you can talk further with your tax accountant or your accountant about. But it protects your LLC if they're done separately. And then two, it allows you to download every transaction that you had for the year that was specifically for your business to be in one place, and you'll be able to have the correct amount of expenses that you're looking for. Okay. So some of those things that you should be thinking about, we'll look at the home office. I'll talk to you about the home office in a second. But first, we can look at all of the individual items that you can look at. You have your office supplies, so pencils, paper, maybe not computer, but maybe your printer, or looking around my office now, highlighters, paper clips. That would be all of your office supplies. If you, when you created your room in your house that was specifically for you to do your business, you may have purchased new furniture. So if you keep toddlers, or if you keep infants in your house and you buy 3 beds, then that furniture should be included in the expense that you had. You may have some other equipment. It may be the Mama-Roo things or something like that. All those things are expenses for your business. If you have any software subscriptions, so I have some clients that purchase, online teaching programs for their preschool agers. Those are monthly fees. That's an expense. If you are one of those individuals who transport your children back and forth, so you may drop them off at school, or you may pick them up from school, the mileage from your home to the school is a deduction. If you have, a gathering and you want to meet with the parents and you want to treat them to a meal while you're doing so, then the travel, meals, and entertainment gifts, that will go into that category. Any kind of insurance that you have that's specifically for the business, there is liability insurance that all businesses can have to protect them, in the event that something terrible happens. That insurance premium would be a deduction for you on your tax return. Retirement contributions, if you are savvy enough and you're ready to take that next step, and I think it's a wonderful thing to, join with the organization that allows you to put money into a retirement, that's a deduction. Social Security, telephone charges, your cell phone, part of your cell phone can be a deduction. And even if you have your children working for you, that could be a deduction as well. So before I go to the next slide, let me talk to you a little bit about the home office expenses. Home office expenses is the gas and electric, the cable bill, the house phone, the internet. If you have signage in front of your house, if you cut your grass on a regular basis to make sure it's presentable for your customers, if you repaint the walls in your home, all of these are home, or what they consider home office expenses, meaning that your house is also a deduction. So if your rent is $800 and a portion of your home is considered to be part of that $800, so some of that $800 is now a deduction for the home office expenses. Even if it's part of your mortgage is even more beneficial, because for the mortgage they take the full amount, and it doesn't matter if you lost money. So there are some great benefits to knowing how to write off the expenses of your home. All right, so what kind of data do I need to keep in my files? Again, I strongly suggest you have a separate bank account, moving forward, that you have a separate bank account for your business as opposed to your personal expenses. If you want to take, when you take money out to cover your personal bills, I would just suggest going to the ATM and pulling that money out, but still allowing the transactions to hit the account if they're specifically for the business. If you're buying food, if you're buying, you might have to buy clothes for one of your children, if you're buying toys, anything, allow that all to go through your business account so that you don't forget what you've purchased. And then try to steer clear of cash purchases, because cash is the easiest thing to forget. So everyone, like I said earlier, should receive a 1099 from whatever organization pays you. That 1099 is what is attached to your actual tax return. Okay. Outside of that, you're also going to get cash pay from your parents. The cash pay that you receive from your parents should be documented, because that data is important to not just you, but also to the parents. Each one of the parents are able to write out some deductions for the child care that they pay for out of their pocket. So it is in your best interest to keep an Excel spreadsheet, or even if you were writing it down somewhere, to keep the data of the parent's name, the child's name, the date that they paid, and the amount paid. They should be receiving a letter at the end of the year that has your tax ID number, which is the reason why most people use a tax ID instead of their social security number. But that will help them so that when they go to do their tax return, they can enter that number in and receive their deduction. So it's important for the parents to know by January 31st how much they've paid you in regards to receiving a deduction for child care on their own tax return. But then that number is also reported on your tax return for the amount of income that you received. So again, you guys are looking at two different ways to receive income. One from cash pay from parents, and the second one as voucher pay from the state or another organization. All right, so what are some other expenses that I need to keep in my files? So if you are, opening a new center and you decide that you want to do some advertising on Facebook or Instagram, or you want to, maybe you are near a Kroger and you want to advertise on the carts, then those expenses will go in advertising and they are completely deductible. Your phones, I believe that previously everyone was required to have a house phone, so that expense was definitely a great deduction. Your cell phone, part of the cell phone, if you're using it to speak with parents on a regular basis, that part of that could be used as a deduction. Computer and internet expenses. So I think you guys are doing laptops now or tablets, but I'm not sure if they're giving it to you. But either way, if you have any kind of computer or internet expenses, so just the Wi-Fi in your home, that is a deduction for you. Transportation and travel expenses. So this is local transportation. Like I said, if you are taking the children to and from school, that's a great mileage deduction. Just keep track. Travel away from home. I don't see this often, but I do have some individuals who choose to go to conferences, educational conferences for the children. So you may have a trip to Louisville or Chicago for a conference in regards to your children's preschool or anything like that. Then that trip is a business deduction for you, as long as you can prove that the trip was for a business purpose. And any kind of commissions you pay to subcontractors. I don't know if you guys have this situation, but Anything you pay to a contractor over $600 needs to be reported on the 1099. Depreciation is something that you probably wouldn't worry too much about. It is for the furniture, anything that you think you'll use for over a year that's under $1,000 would be depreciated. But not, like I said, not something that you in particular would have to be worried about. Any kind of business insurance, any interest expenses, any professional fees. So the fee that you pay a lawyer or an accountant or any kind of consultant. A consultant would be maybe someone who if you were a daycare center, you're paying them to do first aid training for all your employees, or maybe you are paying for all of your employees to have, communicable diseases, or maybe you're paying for them to get their CDA. Those fees are going to go with the professional fees. Again, we talked about the office supplies, and if you are renting out a space, then that rent expense, you wouldn't have to do any kind of percentages, because that's different. 100% of the rent, if you are renting out a location specifically for the daycare, is an expense. We talked a little bit earlier about the in-home, the office, utilizing your house for your business. How would you do that? Well, you would take the square footage of your home, and you would isolate the square footage for your business. So I have some people who use their entire basement. I have people who, only use their living rooms. I have people who only use specific areas of the home. So you would try to get the square footage of the area that you're using specifically for the business based on what they're doing. You would take that percentage based on what part of it is being used specifically for the home. So let's say you're using 20% of your house for your business, then that means that if the rent is $800, 10% of that is $40, so $80 of that, I think that's right. 20% of that would be utilized to be an expense for the business. If my numbers are not correct, it's 20% of whatever the actual rent is what would be your deduction. So there are two different ways to get the rate that you're going to utilize. The IRS actually has some options in there to just do averages, and sometimes honestly averages are better than what you're actually doing in your home. So your tax preparer will pick whichever one is best for you. These are some of the expenses that you can write off for your home. So you're looking at your mortgage, your renter's insurance, the homeowner's insurance, your utilities, gas, electric, water, trash, any kind of repairs, even repairs to the entire house, or a part of that is still a deduction. If you have repairs that are specifically for the area that you use for the daycare, that is also a deduction, and that will be deducted at 100%. We talked earlier about the wages that you pay to your employees being a deduction. Some other expenses are, just the repairs and maintenance of the facility. So this is for daycare centers. Any kind of estimated taxes are deduction. Health insurance that you're paying for the employees. I have a daycare that does AFLAC for their employees, and that's a deduction for them. Anything that is related to your operation of the business is worth a conversation with your tax preparer to see if it is a deduction. So gather up all of your expenses, make sure you do your tax returns, because those are going to be needed in order to get payment for the stimulus. So I guess I could talk a little bit about what I have learned in regards to the stimulus payments and unemployment that is being offered to self-employed individuals. Shara, do you want me to go into that next, or did you want to speak on something before I did?
So before we do, because I know time is running close, let me say one thing, and thank you so much for the preparation. For family-based child care programs, type A and type B providers, We have resources available to help you pay a tax preparer to help you sort through all of these details and have your taxes ready so that you can access other resources. If, as a CPP provider, you need someone to help you cover the costs of having a tax preparer prepare your returns and get all of your financial documents in order, please reach out and send an email request to CPP, and we will get in touch with you within 48 hours. So we don't want any of our providers to be concerned or stressed about being able to afford a tax preparer to help them gather all of these, do their tax filing that it may be needed to access and make applicable these forgivable grants and loans.
Thank you, Shara. Okay, so the few questions that I received prior to the presentation was in regards to the stimulus payment being given to everyone in the U.S. that qualifies. So how it affects daycare providers is that, unfortunately, it is very scary to do your taxes when you are no longer receiving a W-2. So I understand the hesitation of filing. If you do not have any children, then you're probably not getting any kind of credits. You're not getting enough credits to cover your tax liability. So that in itself is a scary thing. The other option is if you do have children and you are able to get a credit, but you're just not knowledgeable on how to go about getting your taxes done. Remember that refunds are only available for 3 years. So 2020, April 15, 2020 is the last day that you can file a return from 2016, and the IRS is obligated to pay you. So it is imperative that if you are not knowledgeable, but you have children, you need to do your taxes. You need to do your taxes because you're going to leave a refund out there. So with the new stimulus package, the IRS is saying that they will take your information based on your 2018 or 2019 tax return, whichever one you have filed. So if you have not filed yet, either 18 or 19, please do so that you can qualify for the additional $1,200 for the individual and $500 for your dependents under 17. The second thing is unemployment benefits for the state of Ohio. State of Ohio will be paying unemployment benefits for 1099 workers, or what we would consider self-employed individuals. The problem is the states don't have a way to process those applications because that was never an option in the past. In the past, unless you were working a specific amount of time and your employer paid into self-employment paid into unemployment on your behalf, you would not be eligible to receive any kind of unemployment compensation. But that is vastly different from what we have always done in the past. So please be patient with the system, but know that those funds are going to come. I have had some clients go in and complete the application, and they are honest about saying that, they own a business, they don't work for someone else. And although they have been denied, the state has reached back out to them to say, hey, we understand that based on normal circumstances, you were denied, but just wait a second because the process is not fully in place yet, but it will be. Also, don't be fearful that because you haven't created your unemployment application yet, that you don't qualify, that you won't be able to qualify for back weeks, which is not the case either. They are looking at it from January the 30th until I think sometime in June or July. So just be patient with the system. If you want to go ahead and file for the unemployment, do so. But if you get rejected, don't get nervous. They are going to correct those issues. The second thing in regards to the unemployment was that unemployment for the state is completely separate right now from unemployment from the federal government, but I don't know if it'll stay that way as they continue to make plans on how to pay out unemployment. But that's the $600 a week that everyone is looking at, that the IRS, well, the federal government has said that they are going to pay out for unemployment, for unemployed, self-employed individuals. So I think that's all the questions that I did see earlier today. Hopefully everyone has enjoyed the presentation, and if there's any additional questions, do not hesitate to let me know.
Thank you, LaShawnda. A couple of final points here. I want to let everyone know that the slide presentation that we're just seeing will be available in the CPP website shortly after the webinar and no later than the end of the day. We hope, like LaShawnda said, that this webinar has been helpful for you. Please don't forget to send any questions or suggestions for future webinars to the info@cincy-promise.org address you see at the bottom of the page. And finally, I want to close by saying thank you for everything you are doing to help Cincinnati's preschool students. Together, you and CPP are helping to educate and prepare our next generation.